Welcome to this explainer. Today we're unpacking what's basically a corporate thriller that is absolutely shaking up the European petrochemical industry. Usually cartels are all about gouging the buyers, but what happens when the buyers are the ones colluding? We're going to look at how a 260 million euro regulatory fine has somehow exploded into a multi-billion euro wave of civil litigation. If you follow the ethylene market at all, you already know this dispute has been simmering for a while, but recent maneuvers, they've turned the heat up exponentially. What was once a closed government investigation is now a sprawling, high-stakes private battle. We're going to break down exactly how and why this happened, using the source material to guide us through every single twist.
Okay, so here's our agenda for today. First, we'll look at the billion-euro claim. Then, a rare purchasing cartel. Third, suppressing the benchmark price. Fourth, fines versus financial losses. And finally, the growing litigation wave.
All right, let's jump straight into Section 1, the billion-euro claim.
So Dow Europe didn't just gently ask for damages here, they dropped a literal 1.1 billion euro hammer. They're specifically targeting 4 companies accused of manipulating Europe's ethylene benchmark price. To really put that into perspective, this single lawsuit is more than 4 times the size of the original fine that was slapped on the entire cartel. The stakes haven't just been raised, they have literally been launched into the stratosphere. When a single producer demands €1 billion in compensation, it absolutely forces the entire petrochemical sector to recalibrate how they look at financial risk and corporate liability.
Which leads us to a pretty massive mystery we need to solve today. What exactly did these major buyers do to prompt the world's largest chemical companies to demand billions in compensation years after the ink dried on the regulatory decision? How does a settled regulatory matter suddenly resurrect itself into one of the most expensive legal battles in European industrial history?
That brings us to Section 2, a rare purchasing cartel.
Usually when we hear the word cartel, our brains instantly go to competing sellers colluding in some smoke-filled room to hike up prices and gouge consumers, right? It's the classic antitrust story. But the European Commission actually uncovered the exact opposite here. This was a super rare purchasing cartel. Instead of sellers inflating prices, competing buyers literally linked arms to illegally force prices down. It completely flips the standard narrative of corporate collusion on its head. It turns the consumers of the raw material into the actual market manipulators.
The European Commission's decision back in July 2020 officially pointed the finger at the architects of this strategy: Clariant, Celanese, Orbia, and Westlake. Instead of fiercely competing to buy ethylene on the open market like they were supposed to, regulators found that they formed this unified front to artificially push down the cost of their raw materials. It was kind of like extreme couponing, but, highly illegal. By coordinating their purchasing behavior, they managed to effectively dictate terms to a market that relies on healthy competition to set fair prices.
Let's move on to Section 3, suppressing the benchmark price.
So the actual target of all this coordination was the monthly contract price, or the MCP. Now, as the definitive benchmark for contract ethylene across Europe, messing with the MCP doesn't just affect a few isolated spot trades. It dictates the pricing basis for a massive share of long-term supply contracts all over the continent. By targeting the MCP, the cartel was systematically suppressing the fundamental baseline used to value ethylene. They weren't just negotiating a better deal for themselves in a vacuum, they were actively tilting the entire playing field.
And because the MCP is just so deeply embedded in European supply contracts, even a tiny, artificially induced downward shift creates this catastrophic cumulative damage. It's a massive ripple effect. Depressed prices shrink revenues across millions of tons of contract sales. When you're dealing with a commodity that's traded in the millions of tons, honestly, even a fraction of a cent per kilo translates into immense sums of missing revenue by the end of the fiscal year.
The European Commission found this coordinated purchasing spanned from late 2011 all the way to early 2017. That is over 5 years of alleged market manipulation. But wait, claimants like the Brazilian producer Braskem are arguing that the bleeding didn't just magically stop in 2017. They allege the economic hangover extended far beyond that official period, keeping sales revenues artificially depressed all the way through 2019, right up to the Commission's decision. Restoring a corrupted benchmark to its natural competitive equilibrium often takes years, and producers fully intend to capture every single cent of that lag time in court.
Which brings us to a really crucial pivot in Section 4, fines versus financial losses.
Okay, so in 2020, the European Commission wrapped up its investigation and slapped the buyers with a combined fine of 260 million euros. Now, €250 million sounds steep for sure, but for the ethylene producers who actually sold the artificially cheap product, that ruling only closed the government's file. It didn't put a single cent back into the suppliers' pockets.
A regulatory mandate is designed to punish bad behavior and deter future cartels, but it fundamentally isn't designed to make the victims whole.
And that is the real catch here. The regulatory action successfully punished the cartel, but it deliberately left two huge questions totally unanswered. Did suppliers suffer actual financial losses? And if they did, how much? So now that massive burden has been handed over to national civil courts, who have to untangle a decade of pricing data to quantify the exact compensation owed. We're talking abstract economic theory colliding head-on with hardcore forensic accounting, and let me tell you, it is a notoriously difficult transition to litigate.
This perfectly sets up Section 5, the growing litigation wave.
Since that 2020 decision, an absolute who's who of the petrochemical industry has mobilized. We're talking Shell, BASF, LyondellBasell, Total Energies, OMV, BP, ExxonMobil, and MOL Group. They have all filed claims in Germany and the Netherlands. The legal question just isn't, did the cartel exist anymore? That's settled law. These titans are now laser-focused on proving that the manipulated MCP translated directly into stolen revenues. The sheer volume of industrial giants entering the fray pretty much guarantees this is going to be one of the most heavily resourced legal battles in recent memory.
To really grasp how crazy the stakes are right now, just compare the financial scales. The total European Commission fines sat at 260 million euros. But then you stack that against a single claim from Braskem for 812 million euros or Dow's towering claim of 1.1 billion. The original regulatory penalty barely even registers against these new individual lawsuits. For the accused buyers, the financial risk has multiplied exponentially. What started as a blow from a regulatory agency is now an existential financial threat driven by private enterprise.
Now, to be completely impartial, the defendants are definitely not just handing over blank checks here. Companies like Clariant are mounting a vigorous defense. Their argument is literally that, and I quote, "Economic evidence shows the conduct had no measurable impact on the market." They are insisting that despite the Commission's findings, the actual benchmark price, and therefore the supplier's revenues, remain functionally unaltered by their coordination. It's an intense economic battleground where cause and effect are being fiercely debated, and you better believe defense teams are deploying their own armies of economists.
So where does this leave us? With the cartel's existence settled, the entire European petrochemical industry is holding its breath, watching these national courts. How in the world are they going to measure these fiercely contested, multi-billion euro claims? Are they going to side with producers claiming catastrophic ripple effects, or the buyers insisting there was no measurable market impact? The answers won't just decide the fate of billions of euros. They're going to set a massive legal precedent that could fundamentally rewrite how commodity purchasing is scrutinized across every industry for decades to come.